YouTube. Raccoon Saloon is live. They got raccoons. I sent that to my friend the other day because she loves raccoons. Don't ask me. She just, I guess the raccoons have all bitten her sister. Something happened, and so yeah, I just made sure. Morning, Chris. And I really, honestly, I have nothing that I've looked at in the markets. So I will go over it. It was funny because there was a social media, and Chris, you guys listen to this one. Morning, Scott. Where's my 4 hour? There it is. Let's see, one of the social media. It's Garducci. I love Gary's stuff, and he's clearly very experienced, but at the 40-minute mark was hilarious when he why would you buy TJX when you could buy, and he proceeds to go through 4 stocks with downside. Morning, Joshua. I was thinking as I was going through all that, and it was actually happening yesterday, I was like, holy crap. What a moron Gary is. Scans. We're going to do scans first. Market scanner. And then I'll pull out some articles because it's Friday. All we're going to do is kind of review stuff, and you don't do much on Friday. Energy was a good one yesterday, though. I mean, Exxon, had a great bounce. Look, we got confirmation off of Exxon. You're probably coming back up to 119. And if you don't, if for some reason Exxon comes down, they're still going to deliver a shit ton of revenue to you. So there's something going on at my neighbor's house on the roof. Morning, Joe. And I'm more interested in what's going on over there. But Exxon, God, energy just overall. AMD killed it yesterday. AMD, Target, morning, Steph, Square. I still have to sell my Square. Yeah, Square's not going anywhere. Douche. Why am I holding on to that? Ugh. It just looks like it's going to get a bounce. It just looks like that. It never does, but it just looks like that. PayPal, same thing. I was smart enough to get rid of my PayPal. I'm not smart enough to get rid of my Square. I like Square. Problem is, it's just not going to go anywhere. Bitcoin, nothing in Bitcoin. I do want to look at IBIT. I have to remember to look at IBIT because I do want to transition some money over there. Former Metric Stream CEO. RYLD. Energy names. We probably got a ton of energy names. Yeah, we got a good amount. Energy. XOM, HAL, FANG, KOLD. FANG is probably one that, I mean, if you look at this one on a weekly basis, it just looks like it consolidated a little in order to make another move higher. I mean, that's what it looks like. And KOLD Energy, this one's famous for all those special dividends during the 2021 run. CLS was a good pullback yesterday. Probably a good entry point yesterday. CLS, I have it down 1%. Scott, I have CLS down 1%. It's a good entry point. I'm waiting for that one probably to get to about 53, and I'll start adding. I think you're seeing kind of that double top right there, right at about 60. I mean, 60 is your resistance, 50 is your support level. So 60 is your resistance. Yeah. SMCI is just a tough one You're just going to see, I mean, I think anything that is up in a, ooh, God. ETFs, AAPD, which is the Apple inverse, is the Apple bear. That looks, I mean, if I told you this chart, didn't tell you it was inverse, but just told you, look at this chart, you'd kind of say, hey, that looks juicy. I mean, that looks like a chart I might want to buy into. Then I tell you that it's the Apple short chart, and you're like, ooh, do I really want to short Apple? ANF, that's not a bad stock at all. Let me see if I get an ad here if I join on YouTube while I wait for this to scan. What happened? There we go. I did get an ad. It's a Peyton Manning Prudential. I don't know which one that is. We're going to put VB, VSS, and then low cost spider sectors. We're going to look at BRK.B. That's a big one. I mean, I was waiting for it to get to 400, but I pointed this out before. I mean, way back in March on the 4-hour, I said, look at that range. Boy, haven't we held that range? I mean, that was right, probably March 21st I put that in. And we've held it. And what's interesting about that, Berkshire is just one of those that probably will not crash, but it's trading sideways. And when you see this one trade sideways, what does it do? It goes all the way up. Now, this was when all the rates were being done, so that makes sense that gets pulled back. But ever since then, it hasn't had major pullbacks, and it's just one that you continue to add to it. Okta's an alpha pick. I don't know if I'm allowed to say that anymore. They scolded me. They said, Seeking Alpha said, you can't talk about our alpha picks. I like them, though. AMD and Target. A couple. I don't think I've had Okta. Let's see. Is Okta on the watch list here? I think it might be. Yeah, it's on the watch list. I'll probably get it off that not-owned list. I mean, look at that weekly. That's at 86. Scott, I don't know what you're looking at, but I have this one flat. Let me see. Okta. No, I have it down 0.5% here. Maybe TrendSpider. Maybe I have to re-log in. Let's log out. And then let's log back in. And we'll go back to the scanner. We got the core investments. Yeah, I think you're looking at something that is missing. And I do that all the time, by the way. There's some data platforms that kind of mess stuff up. But I am seeing, let's see, is anything up? Qualcomm's down 1%. UNH is down 1.57. Apple, ironically, is up 0.75. So 3M, McDonald's, Nike and Verizon. I mean, we've got a good amount of stuff crossing up. It's just a market that is wacky. Investing.com. They are... I like their site, and the pre-market movers are interesting, but yeah. Don't we all wish on Scott's charts there? Team, Fang, Dollar Tree, CSGP, Kraft Heinz. Let's look at the S&P. Nike, Mondelez, Pfizer, PFE, AT&T, Lockheed Martin, Walmart, Verizon, AMD. Okay, now we're going to go back to the 4-hour. Morning, Brandon. Let's go back to the 4-hour. I didn't have chocolate chips this morning, so don't expect like Perky Gary. TSLY. This is one of those that it's the high. I think it's the high TSLY. Let's look. Strong sell. Hidden dangers of chasing high yield. It is a yield of 85%. Morning, Laurel. That one. It's I've held a couple of these kinds of things. Is TSLY, let me see. Is this in our this should probably be in that. No, it's not in that one. Covered call ETFs. We'll just do that. We'll put it in there so we can scan on it. 1528 was when you bought it. I mean, it doesn't track with the dividend, but if we do charting and you select metrics, and we're going to go performance, we're going to do total return because that will include the dividend, and we'll update the chart, and then you go 1 year and you're still down 22% on TSLY. Go short term, you're still down. Go 1 month, you're beating it. You go 5 days, you're beating it. You go, year to date. I mean, it's just clear when you pay that much money, it's just not good. So, top 3 travel stocks. Okay, let me look at what I have here. I have an article from Fidelity, which hopefully will come up. How is the U.S. economy doing? Yeah, I thought this was pretty good. Take a closer look. I thought that was pretty good. I've got just chart stuff. 25 of the 30 names in the Dow. WMB upgraded. Top 10 tech stocks according to the quant rating. Blue Owl was one I saw yesterday. Lilly or Novo I saw was an interesting one. Oxy Daily Chart, 3 reasons why traders lose money. Matt Trades had a great video yesterday. Fair value gap from and I'm going to pull up some of this stuff. Sink says Monesis, Crespi. Don't say I didn't tell you. I mean, here, we'll put this one in. I'm going to put this in because Let's see. Don't say. Let's see. AbbVie declares dividend. Most from CDK. Biggest stock movers. There was one. Therapeutics. This one surged like 80% yesterday and then kind of pulled back. It was a huge one. We'll put that in before I go through all of this stuff. Or put that in. Because I do like to look at the big movers, but it's Friday, man. There's not a lot that you should be lower transaction fees. Microsoft as City ups its price target. Yeah, I like that one. So we'll put that after the Palantir up. Let me see. CURV. Because I think I've got enough to talk about because there's tons of freaking charts and stuff. CURV, it's a hold. The valuation is bad. Torrid Holdings, what do they do? Operates in women's plus-sized apparel and intimates market in North America. Does that sound like a GLP-1 play? I mean, I'd go back. You've got what, millions of people who want to get on GLP-1. This is the exact target for GLP-1 people. The target demographic of this. I can't imagine why you would get into this one. Now, 1 year, it's up 145%. Year to date, you're up 15%. I think it's had its run when you look at the valuation. They're not making money. They haven't released anything forward from their peg. When you look at the growth, their revenues are down. Levered free cash flow, they're making a ton of free cash flow. It's great. It's just, again, this is probably very cyclical. So it's not my thing. I wouldn't want to go into this one, but let's see how the 4-hour algorithm performs on it. I'm seeing a bit of a double top right here around $7 because you're seeing that one back here in January. It was probably beaten down, has gotten a good run. I think Webull is talking their own book. They probably, if I were to get referrals from Webull and promote Webull, this is probably one of the free stocks that they're going to give me. I mean, Varun, that would be my guess on this one. I don't see anything good about it. So, but I mean, what stands out to you here? This is probably a good, you know what? I'm going to share map. Copy. We're going to share this. We'll put that there. I do have Ford as one of the ones that Webull gave me as part of, and it's from a while ago. It's not like I want to own this one. I would say, Jordan, trade this one. I don't like Ford as a long-term, and the reason I say trade it, here, we're just going to look at a long-term chart, okay? This is a very long-term chart. Go back to 2004, you were trading at $11. Go back during the housing crisis, you were trading at $1. But if you invested in 2003 at $11 and 20 years later, 21 years later, that makes no sense to me to actually invest in a business like this. You take something like Apple, we'll go for a monthly on Apple, and you look at this one. This is the type of stock that you want to put your money into. That shows that type of growth. You don't want to see that flat kind of thing from a long term. And until the stock changes, over a long term, you don't want to put money into it that way. You just don't. So Ford, I would absolutely trade. I would trade it on the 4-hour algorithm. If I were to actually, do that, I think the 4-hour algorithm makes you, So the 4-hour algorithm makes you 28% versus losing 4% if you bought it 24 months ago. See, if you look at the bottom of my screen, right below that blue run button, you'll see performance chart, 28% versus minus 4% for the asset performance. So, you win 35% of the time. Your average win is 10%. This got you out with a loss. It doesn't have you back in. It probably is going to get you back in very soon. Just from looking at it, you're under the 200-day. I think with Ford, you're probably fine on that one. Buying it under the 200-day, at some point it'll go over the 200-day. I think these guys do perfectly fine. Now, the problem is the consumer getting killed. So, Okta, let me look at Okta. I like Okta, and I think it's a, hold on, we're going to, I'm pretty sure it's an alpha pick, and I'm pretty sure we're outside of 3 months. Yeah, it's a strong buy. The valuation, the momentum is what's killing Okta, and that, look at the 3-month performance. You're down 18%. That's what's killing it, and momentum is a super strong. Yeah, Chris, I think an options play on that one would be fantastic. I think that's a great play on that one, because I don't think you're losing your capital by 50% over a 6 to 8 month period. You see, 24 years. If you had sold covered calls over that at a higher price, you're collecting the premium the entire time. For 21 years. That's great. So I view it as kind of, you can find a strategy that works for Ford, but buying and holding for me, which is kind of my thing, I'm just kind of, but Okta, the momentum's the only thing that would worry me, and that it's short-term momentum. Now, 9 months, 1 year, it's a little bit concerning. When you look at the Wall Street price target, 31% up. Going into earnings, I mean, the problem is, look at this. They have been just taking down. Now, it's been a little bit on the rise here, but Okta just kind of trades around that. When you look at the analyst ratings history, let's look at revisions. Over the past 90 days, 3 months, 37 up, 2 down. 38 up for revenue, 2 down. So that's pretty good. And Okta going into earnings, their earnings, are they next week? No, they're coming out of earnings. So they just had their earnings, it looks like. Meta's I during an election cycle, during the consumer being strong, I mean, this chart looks ready. Look, sideways, up, down, Bollinger Band cinching up. I think it's ready. Honestly, I think it's ready. So, Meta, you better have it. Better have exposure to it. I like it. I like it a lot. I like it a lot. Okay. Let me open up these. Do I care about? No. Oh, she's listening to me. Let's see. Where am I? There's YouTube. This is a fair value gap video.
The S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate. The S&P 500 and NASDAQ closing at all-time highs.
At least 75% of the trades are at the bid or the ask, and the total premium paid for the contracts exceeds $20,000. A block trade.
The S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up.
A fair value.
We'll put that there. Matt Trades. Matt Trades had a great month.
Our internet bill went up?
Looks like you need Verizon Home Internet. No surprise.
Do that. Is IONQ tanking? I haven't looked at it in a while. And then of course, yeah. There we go. Ugh, and now it's got a 20-second ad. Richie Sambora's heartbreaking confession. I saw a video of by the way, this in conversation with Donald Trump. I've started watching it. Now, Trump is Trump. I mean, he avoids every question that he can. He never answers it directly. I mean, that's a great politician, is you never answer the stuff directly. That's Matt Trades. We have a Why Traders Lose Money video from Ross, Beginner Traders. He's just great. And he goes over that. He's one of the best. I mean, just phenomenal. There's that one. There's this. Which I don't think. Big for Amazon. There we go. Blue Owl was an interesting one. I saw him on CNBC yesterday. Top 10 tech stocks, according to the Seeking Alphas. Quant, biggest movers, and then we'll go to that one, and then we open up our Fidelity article. Looking for when you use the words "looking for a new floor," I consider that's never a good thing. I got out of this at 9. I think I bought at 10, but I got out of it at 9. So, but it was only like 2 shares. It wasn't a ton. I was in it for more for the fun of it. SMCI under 900 again. Video under 130. Okay, we'll go over kind of that stuff. Let's pull up the Qs. Because you're up on the Qs. I mean, this is what's crazy is you're at 481. Remember, 460 is the support level that we have down there. You have no volume here between 465 and 472. None. You get below that. We'll put in a new support level that you want to put, your stop. If you're nervous about this kind of thing, you just put in stop losses. That's the way to do it. Everybody has different risk tolerances and I did a yoga workout. Okay. Okay. Here we go. Okay. Okay, I'm going to hit record. If I crash, I'll be right back. If you're new here, hit the thumbs up. Make sure you're subscribed. I'm live every morning that the market is open. It's a Friday, so we will absolutely just be doing a review of things. I'll kind of go over Apple, Lilly, Netflix, NVIDIA, Palantir, Qualcomm, blah, blah, blah. Micron had a huge pullback. AMD was up big yesterday. I'll go over kind of my thoughts on the market. We'll go over FinViz with a heat map. WMB upgraded and should be about a 10% up stock. TRGP, let me make sure that's the right symbol. Did it auto correct? No, Targa Resources. This is one that looks like a tech stock, but it's an effing utility. Let's see. Together with it, Targa owns, operates, acquires, and develops a portfolio of complementary domestic midstream infrastructure. It's energy, but it looks like a freaking tech stock. Year to date, you're up 45%. 1 year, you're up 78%. It's a 2.37% dividend. The valuation's crazy. But again, some energy stocks are just looking crazy. And it's ranked 30 in the oil and gas stuff. And, but it looks nuts. MPLX, number 9 in this. Energy Transfer, number 10. I don't have any of these others in the energy watch list, but maybe it's time we put some of these in there. DLNG, this is a market cap of, let's see, 145 million. Again, that's super, super small, but it's a strong buy. It's number 1. You look at 1 year, it's up 40%. Year to date, it's up 41%. So, I mean, that's how you use Seeking Alpha. CarMax up 1%. Spirit Systems, Gilead. Yeah. Let's see. Taiwan Semi target hike. Man. Gained 7% on Thursday. We should probably include this. We'll include that. So we'll open one up. And that is right after the FinViz. Target Taiwan Semi. We'll put this one over here. Okay, we're going to start with the Qs. Oh, let me put Taiwan Semi. Okay, I'm going to hit record now. If I crash, I'll be right back. Just, refresh on the channel, and I'll start it under a number 2 kind of thing. Okay. Good morning. Happy Friday. It is Friday, June 21st. Fridays, we just kind of review stuff. Yesterday, fun day. I mean, depend if you were tech focused, if you were in any of the runners, if you were in NVIDIA, maybe not a great day. But overall, it is what it is. A couple articles. We're going to go over an article. We're going to go over a heat map from the S&P, Taiwan Semi, AMD, NVIDIA. We'll go over all of that, how 25 of the 30 Dow stocks were up. We talked about the Dow lagging. Dow was actually up yesterday. We'll talk about some energy stuff, TRGP, PER, and First Solar are good. For utilities, VET looks like a tech stock, VET. I think that one was VRT. It might be, I forget, but I think it auto-corrected. Top 10 tech stocks. We'll go over Oxy. Occidental Energy was just flying yesterday. Palantir. Don't say I didn't tell you about the $25 resistance Microsoft price target. And then we'll go over some educational stuff. Somebody asked about GCT. Somebody asked about Snow. So we'll go over a bunch of stuff. Here's the cues. And here's the cues. And I've said it before. 460 is your support level. 480 is just extended. We're seeing a bit of a button hook up here. If you don't know what a button hook is, we can go over to dailystockpick.substack.com, and that is your basically you just go down to this education center and you can read it. I give a free 7-day trial so don't be afraid to sign up and then cancel after a couple of days once you read it. Again, I don't think that courses are really worth $400 or $500 that you pay for them. Stick with me. I'll get you all the education that you need for whatever you need to trade with. But here's the cues. A button hook. And what a button hook means, think of a half circle. You see it down here? See this? It's a button hook on the bottom. Obviously, it looks like you're taking off. And this button hook on the top looks like you're going down. We need a pullback. Where are we going to pull to? Well, 470 looks like a pretty good place. If you pull back below 470, we have no volume there. See this volume level? And if you don't know what volume shelves are, look at yesterday's newsletter. Yesterday, I included volume shelves, how you can clearly see in NVIDIA, it was pointing to a price higher. This one, if we break 470 on the downside, your next support is going to be 460. That's because the volume level there at 462 is pretty good, but I wouldn't say 462 is absolute. Always stick with the 6 or the absolute handle. So 60 or 70 or 80, whatever. But if we get below 470, I'm a little bit worried. If we hit 470 and then bounce, we're just going to new highs. That's the cues. Now, think the economy is bad? Take a closer look. This is an article from Fidelity. So I didn't want to include Seeking Alpha. I didn't want to include anything else. But this is an article from Fidelity. And they're saying things are looking good. It just feels bad for certain portions of the population. And that's not meant to make people feel bad. It's just if you're stretched, you're in that bad area. We've all been there. You know, other than trust fund kids who have gotten, their start with billions of dollars in the bank, we've all had tough times financially. It's not always, roses and stuff for certain portions of the economy. And sometimes it's tough. But overall, from a whole perspective, the economy doesn't look bad. But we are, the gross domestic product of the U.S. has grown over the past 2 quarters by 3.3%. And 1.6% in Q1 2024. I would argue the 3.3 in Q4 and the 1.6 in Q1, that's not good. We're going down. Again, higher for longer seems to have hurt. The Fed needs to take this. Though still elevated from its pre-pandemic levels, the rate of inflation most recently dropped to 3.4 in April, down significantly from 9.1. But 3.4 is higher than 1.6. Q1 GDP. That's hard. Now wages have generally been rising faster than inflation since February 2023. The unemployment rate is near a 50-year low. The Fed can't wait. If the Fed waits, you very well may have a pullback in this market that is larger than 5%. A 5 to 10% pullback would be healthy. Something a little bit more might not be healthy, but if you think that the economy's bad, again, why is there such a gap between perception and reality about the thing? This is a good article. Signs of strength are visible. Just look ahead what investors should do. And again, this is from an investment standpoint. So let's talk about the market yesterday. Anything in this heat map stand out to you? Semiconductors. Look at that big red blotch right there. Semiconductors. That's what was bad. I mean, you talk about Applied Materials, Lam Research, all of this. Qualcomm, Texas Instruments, Micron down 6%, NVIDIA down, AVGO. Everything was brought down in that sector. Everything. Now, Amazon was up. Exxon was up. Energy was way up yesterday. Healthcare, decent. Nothing horrible. Berkshire up, Microsoft kind of flat, Adobe was up, Apple down, Google up. So it was all over the board. We had big pullbacks. My notes say we had big pullbacks in Apple, Lilly, Netflix, NVIDIA, Palantir, Qualcomm, Shopify, SMCI, Tesla, TSM, and big gains in energy like Oxy and XOM. That is just going over the core portfolio. And how did I do that? I basically looked in this upper right, and it's my watch list. Here in TrendSpider. I give it to you as part of the TrendSpider subscription when you sign up. You get the watch list, and you can see what these are doing. So yet last night, I just went over and I said, hey, let me pull notes on what's down and what's up. There wasn't a lot up, but Oxy and XOM stood out to me. And so that was what was interesting. Now, Micron, when we look at Micron, MU, this was down huge. Their earnings are coming up next week. And this should be interesting because this one has run up tremendously. But we talked about a button hook in QQQ. You're seeing a button hook here. This has gaps all the way down. This one I identified 97 as the support level when you saw this gap up on the last earnings. Are we going for another gap up on this one? That might be tough. That very well might be tough if you're expecting a huge up on this one. Just because if we go over here and we look, And we look at Micron, MU. Trying to see if my dogs are okay down below me. MU, 1 year, you're up 115%. Year to date, you're up 68%. Look at that ski slope of a chart. I wouldn't want to climb that mountain. I ain't climbing that mountain. You look, Monday, June 17th, Micron Technology is positioned for AI factory growth. You look at the quant, it's a hold. The reason is the D, the valuation. Profitability is tough. When you look at Wall Street, it's a strong buy. What's the price target? It's 146. You're trading at 144. So according to Wall Street, you've got a 1.57% upside. And that's based on taking them up. Look at that. Your revisions are all going up. Now, when you've gone up, look at what happened in 2021 when you went up like that. You went up, the Wall Street started chasing it with that. It just went sideways. The actual stock went down, but then you went sideways. Maybe you can't see that. I'll pull that up. This is part of seeking alpha, is understanding this stuff. So you want to take a look at that, but Micron specifically is one that you want to take a look at because this is a high flyer. You know, AMD yesterday, AMD jumps on Piper Sandler makes the top large cap pick. Confident in the AI business. AMD has been lagging behind NVIDIA. But AMD, it's a buy from Wall Street. It's a quant hold. And if we go and we look at AMD as a whole, let's look at the AMD as a stock. You know, I don't need to pull up the chart because the chart shows you the 52-week range is between 227 and 92. You are right in the middle. You are probably getting ready to set this one off like a firework. AMD right now, the quant has it as a hold. Why? The valuation. The valuation is crazy on this. And the valuation is nuts. The PEG ratio is the only thing that's decent about it. It's B+. The PE, crazy. You're paying 46 times forward earnings. And that's aggressive, meaning that they've been aggressive in their forward stuff. Now, revisions from Wall Street, you've had 8 up, 30 down on earnings per share. 12 up, 29 down. When we go to Wall Street and you look at the actual price target of this one, price target, 189, 16% up. I would argue that's not crazy because you look at the 52-week range. It got all the way up to 227. We can look at this one. I own this one as long as I own I own NVIDIA as well. Those are my 2 chips that I've chosen to own. Did I sell at 227 when it got back here in March? Nope. Should have. But I'll add more. What are we seeing? I'm seeing it trade a little sideways under the 200-day on this 4-hour. The RSI down in no man's land at 52. The MACD below the oscillator. I don't think this is a bad one. But the valuation is high. Was I buying at 100? Absolutely. Did it feel right? No. But at 100, when I was buying this one earlier this year, as it dipped down, early last year, in the middle of last year, as I was adding to it and we were going down, I was adding to it as it went down because I did believe in the AI story of AMD. Yes, I believed in NVIDIA more. Yes, I added SMCI. But I believe in this stock. And so, again, did I sell up here at the top? No. Now, your ultimate support is going to be the high over here. It's going to be 147. Are we getting down to 147? You could. The Bollinger Bands are cinching up a little bit. They haven't cinched up. Look at this Bollinger Band right here in October. It was super, super tight. This one hasn't been tight enough yet to say, oh my God, we're taking off. But don't expect this one to take off. I just don't see it. Now, one that has taken off is Taiwan Semi. Taiwan Semi's price target raised by Bernstein on positive growth. We've talked about them raising their prices. This is the one that makes all the semiconductors. And if you believe in NVIDIA, if you believe in AMD, if you believe in Apple, if you believe in Microsoft, if you believe in Qualcomm, all of these guys are made by Taiwan Semi. And they're talking about raising their prices. And when you look at the average Wall Street price target, it's down at 173. So you're right at your price target. Now, this article points out, if we go to this article points out they're at 200 and you're at 173. So it's all about who you're going to listen to, what you believe in the stock. Is this one that you want to invest in? So something that I want to bring up. Yesterday, it seemed that any stock that was up year to date got pulled back. And I went over this. 25 of the 30 Dow names were in the green, including Salesforce. And again, when I talk about every stock that was up, seemed to have been down yesterday. CRM is one that got pulled down. We talk about any reaction in the market is an overreaction. I think you're starting to fill this gap. Now, CRM is extremely expensive. Salesforce leading the price-weighted index by 0.77% for the day. The S&P and the NASDAQ composites were down probably on the mini surge of crude prices. But the S&P and NASDAQ, they were both lower. It's the TSX was the index that was up. But yeah, I mean, this is where you're at kind of thing with CRM. I think you're getting back to that 269. I do. I mean, yeah, software is a problem right now. Software is not one that you want to make, light of. But their price target is still 299 and they're trading at 240. Again, the momentum sucks on this. The valuation sucks. But when you look at the valuation, the PEG, it's 1.26 going forward. The average sector is 2.01. Again, this is software, so it's not a great time to invest in software. And I would argue that, if you want to do this pop, you would probably just wait for the algorithm to tell you to get in 242, and you're trading at 240. It went all the way down to 230. Again, the MACD is super, super low. The RSI after these earnings, when you were trading at 216, the RSI was down at 11. You don't see that in Salesforce. And when you do, here, you see it down at 20 after this drop. This was a kind of warning or something. Something happened with that one. But it's an interesting one. So Taiwan Semi, Salesforce, whatever you want to do. Biggest stock movers today, Asana, Sun Country, Sarepta Therapeutics. FDA granted them stuff. Again, it's a Friday. Do you want to buy this stuff? Exceeding expectations, Smith & Wesson's fell 4%. Softer near-term demand. We'll get to Palantir. I'll get to it. You can't tell me I didn't tell you that 25 was the place to sell. But again, top 10 tech stocks according to Seeking Alpha Quants. There's 10 of them. There's 10 of them. They look good. These are good stocks. So 10 of them according to the quant. Let me see. I've got a couple of others. WMB, which is Williams. WMB, Williams Company. We can look at it over here. This was one that I saw a trader yesterday talking about, and it's an interesting one. The growth and the valuation are but demand is high for natural gas, and it's a natural gas company. And when we look at this one, the valuation and the growth suck. But I would argue with natural gas, we are looking at probably an increase in demand. Now, 1 year, you're up 38%. Year to date, you're up 22%. This is an energy company. That's great. You're trading here your 52-week high. When we go and we look at Wall Street, you're looking at it as a $41 price target, and it's trading at 42. And you're looking at them chasing this. They're probably going to up it. They're probably going to up their price target. So it's an interesting one if you want to invest in nat gas. This was one that where the trader in particular said they're upgrading it, and it should be hold about a 10% update, which means it's only going to 46. So it doesn't need a lot to get to 10%. TRGP, which is one that was interesting. Now, the algorithm had you in at 41. So you're here at 42. It's showing you complete strength on the chart. The MACD down below where it was at its high, but the RSI is up there. Do you want to buy it? Not on a Friday, but add it to a watch list. TGRP is one. Let me see. TRGP. So I got that one wrong. TRGP. This one, Targa Resources, it's another energy stock. It looks like a freaking tech stock. This is an energy stock. This looks like it. I mean, if you were to tell me in January buying this at 83 was a good price and it would be at 120, 130 at some point this year, that'd be crazy. TRGP. This is Targa Resources. When you look at this one, top shorted S&P energy stocks at the end of April. I mean, this is up at its 52-week high. The valuation is crazy. The growth, A-. But this is a good one. Now, Wall Street has a strong buy. 127 is the price target. Do you want to buy it? I don't know. I mean, again, you have to find places in this market. did I do PER? I think it automatically. No, we don't want I forget the name, but I wrote down two of them. FSLR was one as a top for utilities. VET is one. This is Vermilion Energy. Again, this one trading really well. You're trading within a range on this one. And if we pull out on this one looks like it's just hit its 200-day. So I think that one, there was another one that I meant to put in there. I'm going to take that whole section out. We're going to screw that one. Top 10 stocks. Oh, one that I saw yesterday. There's the top 10 stocks. Blue Owl Capital. This is private equity. This was an interesting one. Now, this is an analyst that said it. I didn't trust the CEO as to, hey, it's going to be a good one. And he was saying, hey, private equity is at an all-time high, blah, 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 blah. And he was going on. See, I was impressed. 1 year, you're up 51%. Year to date, you're up 17%. It's ranked 44 out of 93 in the financials. Its valuation is crazy, but the growth is there. And you look at the PEG, 0.33 versus 0.41. When we look at Wall Street and they're trading at 17, price target is 21, 20% upside. Look at the way it trades compared to, it usually catches up to its price target. So again, you've had this dip. This might be an opportunity for you. And if we look at OWL and we look at the stock chart, again, it's up this year. So it might be just looking at a pullback now. But where are we going to look at it? We're going to look at it under its 200-day right now. So when it has gone under its 200-day and private equity is good, you can kind of see this. It pops over its 200-day. So the algorithm got you in at 1770. You're in this one. Algorithm makes you 69% versus 72% buy and hold. But I would argue, I don't know this business, so I want some protection and take emotion out of it. It's interesting. I saw a person yesterday, a pharmaceutical analyst, that said, hey, which one would you rather buy, Lilly or NVO? And Lilly is in the core portfolio. It is an $890 stock. This has been one that the valuation is nuts. The MACD is super high. The RSI, ever since May, the RSI hasn't come down. You've gone from $735 all the way up to almost $900, and you're seeing a little bit of turn back here. If I pull this back, you're currently in a 22% run on this one. Somewhere in that neighborhood from $735 all the way up to where it's trading today. You got a little gap down below, baby gap. This is, think of, I'm a grown-ass 50-year-old man. I ain't going back to the baby gap. This stock ain't going back to the baby gap. It ain't going back down there to 787. They've got too much. The pharma analyst said, Lilly, even with its valuation based on GLP-1 and the Alzheimer drug, they said there's no losing on this one. So what do you want to do? On pullbacks, you want to take an opportunity and add to it. Yes, it feels crazy, but you want to do that. Now, this one makes you 122% in the algorithm versus 205% buy and hold. You want to buy and hold this one. I'm telling you, you want to buy and hold this one. I've had this one in the core portfolio since June of last year. Where was it trading of June of last year? I think around 400. Let's see. Let's pull it back. June of last year, July, yeah, about 400. That's where I added it. So it's interesting. It's an interesting one. I like it. I think it's a good one. There was a report yesterday. Andy Jassy is the CEO of Amazon. Anthropic, latest model Claude 3.5 just released on Amazon Bedrock today. Amazon's an AI. If you don't have Amazon, am I adding Amazon today? Probably. And the reason I say that, and again, we talked about this 188. If you don't have Amazon today, just add it. Its valuation is not nuts based on them running pretty much every AI model out there on Amazon Web Services. I don't think this is a bad buy. Yes, 188 is the absolute resistance level, and you're at 187 right now. And I know I say, hey, hold off to buy it, but if you don't have Amazon, I think you should buy it. I think we're going to get above that 188 finally. We've been trailing on it. You're seeing it. It's just capitulating for weeks here. I sold at 176. I'm just going to buy it back. But I'm going to buy it back probably at 190, probably at 195, and then it's going to go to 250. But Amazon with that kind of news, I mean, you're going to see this stuff pop. They're getting into pharmacy now, big on pharmacy stuff. The average price target is 218. If you don't think we're going to hit 218, look at this. Every time that this stock has gotten up to its price target, it just, they just keep raising it. And that's since the pandemic. Again, with the pandemic stuff, this was a COVID lover. They had too many expenses. They got all of that under control. This is one you want in your portfolio. So I thought that news was interesting. I put it out on Twitter. Now, Palantir. Sync says Monesis Crespi downgrades on enterprise software. Let's just go look at the chart on Palantir, because don't say I didn't tell you. You were at 25 yesterday. You had every opportunity in the world to sell at 25. I told you, old resistance turns into new support, but you have to hold it. And we haven't been able to hold it. Even though you see back here in February and in March, the candles got over it, it wasn't for an extended period. You weren't able to hold it. We haven't been able to hold it. This is where big money starts to sell. And that's the issue that you have. Get out. You're seeing the button hook. We talked about the button hook. Palantir is here. If you want to get out, get out. I just think you can buy it again. If we hold at 25, buy it at 26, because then 30 is your resistance. But this one as a whole, this is not one based on its valuation that you want to hold it. This goes all the way back to its IPO. The 25 just seems to be a heartfelt kind of, hey, it's a little bit expensive here. And that's what you want to look at, because people are making money by buying and selling this one. They're not making their money by buying and holding. This could be a 10-year winner. Absolutely, this could be. Average price target on Wall Street, 2134. And the valuation is the reason it's a hold in the quant. Even when you look at the PEG ratio, going forward, it's expensive. The PE, it's a 91. You're paying 77 times future earnings. It doesn't make sense. It's software. We're in a software recession. Get out of it. We'll go over snow in a little bit. But yeah, get out of Palantir. Take your money, buy it back at 20, because I think it's going back to 20, and then you can take your 25% gain again when it pops up to 25. Microsoft is in spotlight as Citi ups its price target. They upped their price target. They raised the price target from 495 to 520. If we go to Wall Street on Microsoft and we look at the average price target, I think it's 450, 460, somewhere around there. 489. So average price target is 9% from where it is today. This is like Amazon. You just buy it. And you don't worry about this particular stock. It's an AI stock. You just buy it and you've got upside. Now, which one do I like more, this one or Amazon? I would say Amazon has more of an upside. Just, you look at the charting of this and let's select symbols. And the reason, and there's no, this is just a guess. Understand, when people are saying this, it's just a guess. And it's an educated guess, but it's just a guess. But look at the 1-year chart. Amazon is up 47%, Microsoft up 31%. When you switch it to year to date, Amazon is up 22%, Microsoft is up 18%. When you add 6 months, that's when we start to get a little bit closer. When you add 1 month, Amazon is significantly underperforming. I think Amazon has more of a chance in the short term to outperform Microsoft. Microsoft has run for the last month. It's 5%, 4.79 in 1 month. Amazon's been left behind. And Amazon's one of the big ones. So if you're thinking, well, I want to get into one big one, I'd say Microsoft or Amazon's the one you want to get into. But you should have both of these. There shouldn't be an and or. Say you've got $1,000 and you want to put it into one stock. Well, split it into two. Put it into Microsoft and Amazon. That's it. But again, if you want complete exposure, then just go QQQ. Now, Ross from Warrior Trading. This is the biggest mistakes that day traders are making. This is a great video. Just go and watch it. It's a good video. We're going to include that one. This is from Matt Trades. Trades by Matt. He just took, I think, a $189,000 profit. Understand, he is a prop trader. He runs like 50 accounts at once where he kind of copies the trades. This is not for somebody to join who just wants to test out trading, because these prop firms, they take your money and then you have to basically qualify in order to get it. So it sounds great, but understand you'd have to watch him. He is a momentum trader just like Ross, but Matt is actually good. If you watch him live, he's fantastic. I mean, he's a really, really good trader. He trades futures. Now, TrendSpider. They put out something yesterday, and I was on their YouTube channel, and I found this fair gap, value gap. This is part of the beauty of TrendSpider, is you can find new indicators that you don't use, and they usually have them outlined on their YouTube channel, and you can watch it. You can look at their blog. You can look at all that stuff. Oh, look, there's a handsome man with a big nose right there. But fair value gap, it's a good. I use Gap Snake. Just so everyone's aware, when I look at gaps, like let's say NVIDIA right here, I think they've got gaps on the way up on the 4-hour and stuff that we might trace back to. And I'm going to look at right now, by the way. We'll look at NVIDIA before we go to the social request. But NVIDIA right now, these gaps that you see right here highlighted, that's a gap snake. That's not the fair market gap. The fair market gap's fair value gap is a different indicator. I don't use it. I found it yesterday. I was playing with it. Now, where are we on this NVIDIA? Let's take a look at this, because what I want to do is look at the after-hours selection on this, because I do think there's an opportunity in NVIDIA once it gains support. It doesn't have support now. Market just opened, and we've even gone down further. So I don't think that 120 is your support level. If we were to look at this 4-hour, and we would go to this 4-hour, I'm going to take out these after hours things because the market, the algorithm doesn't work on those 4 hours. If I were to take a look at this and I were to say, okay, where's my support in NVIDIA? I would look at this high and I would say it's at 96, 97. That's the absolute support. Okay. There are some support levels in between there, but I would say that kind of high, because you've got it a couple of times here, that is the one, 115. If we're going to look at 115, I think 115 is right there. Another one that I see a little sideways movement here is about 122. So I think those are the levels that you can do. Now, if we pull this back and we pull the volume back, I'm just going to pull the volume back. I missed it. We're going to pull the volume back to here. The last time it popped up to 100 and then it kind of came back. Look at the volume. There's not a lot of people buying in this top part since then. The majority of people are buying down here. So what you have are people who probably bought down here who are selling up here. Now, it doesn't include like long term. It's just from this point forward where people are holding, where they buy, they bought down here. They're not buying a lot. Ironically, look at where those volume shelves are. Those are the top. If we lose those volume shelves, there's not a lot of volume between 111 and 96. Not a lot of volume whatsoever. So be careful with NVIDIA. Yes, you want to buy the dip. I will repeat this. Yes, you want to buy the dip. But you don't want to go all in on this one just because it went from 140 to 135. You want to wait until you find some support. I'd rather see you buy it at 125 than to wait, and see it go to 115. But you've got to wait for the support levels. And my support levels, I look at the 4-hour. Just because, I'm not good enough to look at the 5-minute. No, I'm not going to trade this one. I want to look at something a little longer. And if you want an absolute longer, go to the weekly. And if you go to the weekly, take a look at this support level. The support level that we see right here at 96, that was your previous high. So don't think that this one can't come down to 100. It can. It can. Realistically, it absolutely can. Your MACD, super high. Your RSI, still at 76. That's coming off 80, 82, 84 levels. So, yeah. Kate DeSilva, social request, an update on GCT. I don't know what to tell you about GCT. I've said it before. GCT is a buy and hold. And I don't, right now I'm sitting with a $40 lot. Right now I'm sitting with like a $35 lot. It's at 28. The algorithm makes you 235% versus just buying and holding makes you 52%. Algorithm had you out right here. So if you want to get out of it, June 17th, you could have gotten out at 31. You're sitting at 28. I argue that it is still an alpha pick. It is still a strong buy here in the quant, and they stick by it. They seem to think it's solid upside left. Giga Cloud Technology, strong buy here from May 31st. This is from June 7th. Gains amid companies' response to short sellers. There's not a lot of news on it. So there's not much to update you. It is a small cap stock. And when you look at this weekly chart on this, it is, I've told you before, 25 is a support level. If you get down there, look out below because 18 is your next support level. If you get down below there, I think 10 is your next support level. So this one will move. I'm just looking at it as I've added a lot of it. I've got a bunch. I'm down on it, but I'm just sitting there and holding it. I'm playing it with alpha picks. And alpha picks is this one. If you have this whole portfolio, you're doing fine. And I don't think that GCT is a huge portion of the alpha picks yet. Remember, they buy 2 stocks per month. They buy one at the beginning and then one on the 15th. And they alert you when to sell. They haven't alerted when to sell. But GCT is one that they still believe in, even though it's down at 28. I don't know what update you're looking for, but it is a buy and hold, and I just bought like a month ago, so I'm not even looking at it, to be honest with you. Am I looking to add more? I'll look to add more. At the time when it actually finds some strength, I'll look to add more. I don't think that we've really had a ton of strength. If you look at this 4-hour, there hasn't been a ton of strength here. That 50-day has just been moving down. You just got the death cross. I would expect some more downside here. I would expect it to touch 25 again. And if we again, look out below. I am not the best protector of capital. So Kate, if you're big on that one, my apologies on that one. But I'm a long-term one. Again, the stocks don't always go up, and you're seeing clearly right here that 40. If we just look at the 40 level, it's resistance. We'll just put this one at 40, right there, $40.50. It's resistance. You've broken it once, twice, 3 times, and I played it for this earnings. I was completely wrong. Just broke down. But there's no update really to give other than, hey, the CEO says that the short sellers are wrong. Short sellers are winning right now. Raul emailed me, hey, Gary, hope you're doing well. I reached out to you to see if you could cover snow in the pod. Heavily invested in this one and just unable to read the charts as to what's going on. Raul has TrendSpider, and we emailed back and forth some charts. And I told him there's no update on Snowflake. It is software. Software is in a quote-unquote recession. The valuations on software have gotten nuts. But I argue this one is still within this range. And that range that I highlighted way back here in October 2022, I said, or it might have been January 2023. It was definitely over a year ago. I said, this is a stock that will pop to 200 and come back down here to 130. And it's at 125 right now. Does that mean you go out and buy this at 125? No. And the reason is because you have to wait for the software to actually level. The momentum sucks on this one. The revisions suck on this one. The valuation getting better. They're still growing. Profitability, fantastic. You look at the PE, it's 131. The PEG going forward, it's 7. That's 286% above the sector. So the metrics look horrible. You don't buy this for the metrics. You buy this based on this just popping back to 200. It will. Do I think that it's right now? No. Do I think it's like, a couple months from now? Maybe. More than likely, we're just looking at it consolidating here. You just had the IPO way back here in 2020. So this is a stock that has continually gone down since 2020. But I argue that it's just this range that you want. And that, again, the algorithm got you in at 130. Was I adding? No. I think my average purchase price is like between 150 and 170, somewhere in that neighborhood. And you're seeing since this gap down on earnings, 2 earnings ago, yeah, it's gone down. Since the last earnings, it's just gone down. Software is just performing bad. So Raul, my apologies, but it's softening bad. Bisco from Spotify. When I clicked on this, it came up with an ad for an opera show, and I'm thinking, did Gary lose his mind before I realized it was an ad? No. I didn't lose my mind. Derek in Europe, RYCE, 1 year matches NVIDIA gains, beats the rest of the Mag 7, 400K portfolio, 35% in the Mag 7, 50% in quality companies, 10% in Bitcoin-related ETFs, 5% in Hail Marys. That's a fantastic portfolio. And let that be a lesson. 35% in the Mag 7, 50% in quality companies or ETFs, I'm assuming, 10% in Bitcoin-related ETFs. That's fantastic. That's fantastic. 5% in Hail Marys. That's the way to do it. Now, RYCEY, this is Rolls-Royce. And I will argue, yes, it's beating the Mag 7 in 1 year. 1 year, it's up 202%. It's fantastic. Fantastic. We can go over here and we can look at the Mag 7. I will choose Apple. Let's just choose Apple. Let's select symbols and we choose Apple. We'll just choose Apple. Apple is the one because Apple's the one that I have. Now, am I upset that I don't have over 1 year or year to date? I don't have Rolls-Royce? Absolutely. 1 year. Pretty upset because I'm only up 13% on Apple. Still pretty quality company. 3 years? Still pretty upset. 5 years? I'm not upset. 5 years? Apple's up 320%. Rolls-Royce is down 48% over 5 years. Go 10 years? Apple's up 811%. Rolls-Royce is up 66%. The point is, Rolls-Royce is a great company. Good, solid growth, good profitability, great momentum. But have they reached the top? I mean, the revisions, there's not a lot of people that cover this. When you look at this one, again, it's at $5.91. The market cap of this one is $51 billion. It's not super small, but it's also not a big cap. So you can't compare it to the Mag 7 because this one's able to grow at a significantly bigger pace. Now, it's up at its 52-week high. When we look at Wall Street, there's only 2 analysts that cover it, and their average price target is $6.24. I don't know when those have come, but you can see they've constantly just raised their price target. So I don't know enough about this one. It's an industrial, aerospace, and defense. They make jet engines. They make a bunch of stuff. But it's a good company. But do I want to own this one, or would I rather own the Mag 7? Much rather own the Mag 7. In my mind, I don't think that this is the basis of a good core portfolio stock. That's why it's not in the core portfolio. But this is a fantastic one. Here on June 17th, just 4 days ago, Steve Kress said, hey, it's an aerospace stock, continues to climb. Strong buy. He says it's a strong buy. I trust him. I just, again, I don't know enough about this space. I don't know enough about their earnings. The valuation, it's good. I mean, the PEG with their growth, as long as their growth continues continues, and their growth is just phenomenal. But as long as that continues, free cash flow, they're down 73%. It's an industrial. I'm just not a super fan of this one. But I won't argue that it's a good one. 5-10 years on any of those Mag 7 stocks, by the way, you're not happy. It's a good one to trade. That's what I said. C. Guarducci, and this was funny. If anybody listened to the show yesterday, I love Gary's show, and he's clearly a very experienced trader. I'm not a great trader. I'm a better investor. But the 40-minute mark was hilarious when he said, why would you like to buy TJX when you could buy, and then I proceeded to go through 4 stocks with downside. I laughed on the inside when this actually happened yesterday. I just didn't let people see it because it's pretty much the story of my life. Is when I look at something and then I say, well, why would you want this? And then look at that. And the show is my world. My world, and my girlfriend will tell you, everybody will tell you, half the time when I say something, I'm usually overreacting on stuff. But I am a better investor than I'm a trader. And trading-wise, I do make money. I mean, you go on Savvy Trader, I'm beating most people in my trading portfolio. But yes, Guarducci, I commend you for listening. I thank you for listening. But yeah, I laughed at that one too. I thought it was good. A. Joel Franks, GOSS, curious about pops over the last 5 years. Very, very new to investing. A. Joel, GOSS. So if you're new to investing, I will tell you, biopharma, if that's what this is, I guess it's called Gossamer Bio. It's not one you want to make your core holding. And I will tell you that because I'd rather see you in something like IBB or one of those types of ETFs in this, because there's thousands of these names and they go up and down based on just approvals or denials and trials and things of that sort. And you can see this huge swing of stuff. This is not one. This is a stock that if you look at it, it is upper left to lower right. This is a weekly chart. When you see something that's upper left to lower right, you want to stay out of it. It's not one you want to look at. You want to learn what these candles mean. And what the candles are is just every week, this one continues to go down. Look at a long term, okay? This is a 200 period moving average. That's that's the red line. The 50-day moving period moving average. The 9-day is the green and the 21-day is the yellow. All of these lines are moving down. This is not a good investment. When we go over here to Seeking Alpha and you look up Gossamer Bio, now this may be you may make 10, 15% in the next day or two. Over 1 year, you're down 56%. This makes no sense to invest in. The valuation, it's a B, but ignore that. Your growth, you're not growing. Your 52-week range, you're at the bottom of this. And the only reason you're at the bottom is because the high, if you pulled this back out 52 weeks for every year, you're at the bottom of your 52 weeks. You're just continuing to go lower. The market cap, 128 million. This is small cap. You don't want to look at these things. If you're new, this is not something you want to trade. If you want to, not one you want to invest in. If you want to trade this one, then just learn candles. And where are you going to learn candles? Go over here to the Education Center. And you can find out, I tell you how to day trade. I tell you how to, invest in stuff, how to look at stuff. And it's a free 7-day trial, so don't be scared off by the price. You can cancel. I'm not offended. But age-old Franks, I wouldn't look at this one. This is one that I'd throw out. I mean, again, if it's a bio one, anything with bio, just toss out. Kate Gargas. Hey, Gary. Thank you for sharing your knowledge. I was wondering what your thoughts on Siri as a long-term hold. This is Sirius XM. I am not. I'm a Howard Stern super fan, so I love Howard Stern. Sirius is one. I am not paying for Sirius. I am on a family plan with Spotify. Spotify is what I distribute the podcast on. That's where this one is going. They are in direct competition with that. They also have an enormous cost that Spotify and others don't have, which is the satellites that broadcast this transmission service. I think they convert to a streaming service at some point and use the satellites for some other type of communication. That might be a good business for them. But right now, I don't think this has any hope of popping back. Now, I say that knowing nothing about this, where they're going. But the second Howard Stern retires, this is just in the tank. They just don't have the programming to actually hold up the subscription. If you are one of the people who actually subscribes to this service, you are one of the few. They have significant. I used to work one of the call centers that I worked with at Earthlink in Guatemala. The next call center over that was housed there with agents that switched back and forth was actually Sirius. And this was years ago. We're talking 2012, 2013, somewhere in that neighborhood. But they had the same saves offer. And Sirius just told me, we're just waiting for the stuff to die, the customers. I mean, that's essentially, they'll give you an offer left and right in order to try and keep you, but there's no real fundamental, hey, this is a great stuff. Now, the valuation is a B+, but take a look at the long term. When you look at this 5 years, it doesn't make sense. And I will tell you, how do you find a stock that's good long term? Take a look at this weekly, okay? If we saw this weekly start to change on the way up, you may be able to actually change. But I don't see that 200-day. It was looking up right here. And the reason it was looking up, this is 2019, and you're seeing it continue to rise. But ever since then, you're just seeing it drop off. And as you see that 200-day start to move down towards the right, and you see the 50-day move down towards the right, you can trade it, but I wouldn't hold long term. And the reason I wouldn't hold long term is just there's no value in this company. Now, on the weekly, you're looking like you might have a MACD cross up in your RSI, so you could absolutely trade it. I mean, the algorithm loses you 16%. There is a time frame and a strategy that will work to trade this one. The 4-hour algorithm still loses you 15%. But this one, if you bought at 260, you're up a nice 10% on this. So I would trade it. I would absolutely not get into this one long term. And that's coming from a Howard Stern super fan. Scans, we had a bunch of energy. One that caught my eye that came in on the scan is AAPD. Apple. AAPD, this is the Apple down. Now, if I didn't tell you that this was a short ETF, you would look and you would say, oh, this looks like a pretty good stock to look at. You just had your death cross, and every time you had the death cross, didn't stay down too long, and it went back up. And your 200 days moving negative, but overall, it probably looks like it's, you look at the weekly, and it's always going to move negative and stuff. But if I told you it wasn't a short one, you might look at, oh, God, I can make this one up to 20. It's at 1852, but it's Apple short. I don't short Apple. I mean, you don't know what's going to come out with Apple. Does the valuation at Apple at $210 make sense? No. I think it comes back to 200. If you want to play AAPD, it did just get that cross up, and you can play it. You can short it. You can do whatever you want, but that one caught my eye. Exxon, this is based on the price of oil. The price of oil has just gone up. You're up on almost another 1% today. At what, 112? This is going back to 119. It's going to hit 119, and it's going to bounce off 119, or it's going to continue to break it. And again, 119 is probably you could even put it up here at 121. But you might get the death cross. You might get that 50-day moving down. The last time we had this death cross here, let's pull it back so we can see it. The last time we had this death cross, come on. The last time we had this death cross, you had a couple of times where it went up and then it came back down, so you had it lower. I mean, again, this is from, let's see, the death cross happened in November 2023, and you finally got the golden cross in March. So this one's going to move, slowly but surely. Here's my thought on energy. And again, we go back to, is the economy bad or not? My thought on energy is the administration is going to try their best to keep the price of oil down. The Saudis and OPEC will do their best to drive the price of oil up. All that Biden has to do, and they've done it. Even Trump in his all in, the beginning where I listened, he was like, all we need to do is turn on the spigots for oil. And then somebody, you can see his brain spinning. And he's like, oh yeah, we're pumping at all-time highs. And he's like, I would even pump more. Well, pumping more doesn't necessarily bring the price of oil down. You could crash the price of oil and then we could head into a recession. There's a balance there. And you talk to any economist and there's a balance there. Is it too expensive now? I don't know. I mean, the economy seems to be working pretty well. If you bring the price of oil down, the price of energy down to next to nothing, you definitely cause a recession because that you can't sustain it. So the price of oil has to be up, but it's manipulated. So Exxon, I think you're going to see it go to 119. I mean, again, these guys had late July. They have their earnings. They're going to record a record amount, and you're going to see it pop back up again. It just goes on the price of oil. They're making money as long as the price of oil stays over 40. But their growth prospects, again, they're not growing a tremendous amount. Exxon and Chevron, you're not going to lose your shirt in Exxon and Chevron. This isn't going back to 50 in the next year. It's got a 3.4% yield. It's not bad. Exxon, prepare for a rainy day. These are, look at the analysts. Strong buy here on June 16th. Buy. Strong buy here on June 11th. Then you got to sell here on June 18th. It's based on the price of oil. If you want to enjoy, I would argue that MPLX is a better investment if you're just looking for something that yields 8.26%. And this is an energy. And again, you're going bottom left to upper right. This is just, in my mind, this is just a good, solid buy. And you see, May 28th, strong buy. June 11th, buy. But again, pick your energy winners. There is a bunch of them in the thing if you want. They're all in the newsletter right here. You just go to the most recent newsletter and you can scroll down to the bottom. I don't care if you use TrendSpider. These are just ones in my 4-hour algorithm that show that they're in a bullish trend. That's all it is. And I list them down there for you. If you want me to do a chart for you, just email me. Let me know that you want me to do a chart. This newsletter is 100% free during the week. So, and again, if you want the education stuff, I give a 7-day trial. You can read everything in a day in that education center. Get your full course. Read it in a day. It's completely free. And then just cancel. I won't take offense to it. I just look for people to support me, and that's it. I put a lot of work into this. But again, the newsletter, 100% free. I'll have a paid one out tomorrow. I don't know what I'm going to write about, but last week I did write about Juice Rally may set things up nicely for July, and I talked about a pullback. We haven't seen a pullback. I may have been a week too early. We're seeing a nice the Qs come back down. We're seeing NVIDIA down 3% at 126. We're seeing Netflix still fly up. We're seeing Coke up 1%. We're seeing Google up 1% over 180. So I think this is a stock picker's market. NVIDIA down 2%. Palantir's down 4%. SMCI down 3%. Shopify's back down to 63. Can't get out of its own way. There's differences in this market. Like I said, 25 out of the 30 Dow stocks were up yesterday. But the market felt horrible for me because I'm in tech. And Qs, look at how high you are on this MACD. It's got to come back down. Look at how high you are on the RSI. It's got to come back down. And the volume is trending lower. As we pull back, if you pull back on lower volume, that's going to set us up to go high. Just it. So if you have any questions, hit me up. Remember, TrendSpider's on sale, 50% off. $53. Seeking Alpha, you get a free 7-day trial, 20% off your membership. Alpha Picks, best stock. Look at the portfolio. It's up 122%. It pays you back if you put enough money into the portfolio. You can get to it all here on this. If you make money, I just ask for a nice little tip. PayPal, Venmo, Cash App, whatever you want. If you want to save on your phone bill, Visible. It's the service that I use. AT&T is the fiber service that I have at my house. If you don't want to sign up I would urge you, if you don't want to sign up for TrendSpider, get a free charting program. One of the best for your desktop is Webull. And I like that. I like the software. I just don't use it because I love TrendSpider. But Webull, they'll give you free stocks if you sign up through that link. And all the socials are up here if you want to get to the socials. Have any questions? Hit me up. Talk to you later. Have a good weekend. Okay. Yeah, Chris, Syria's a tough one because I think Buffett did get into it big. I think John Malone and that group have some plan or roadmap down the road. There's something going on there because you can't tell me that that's a business that they're just going to let die. I just don't believe it. Are they going to take that spectrum and use it for something else? I don't know. Meek, I make less than $55,000 a year. So it depends on your, and I don't want to say status. I think it depends on the way you lived. If you're just starting out, it's terrible. But if you're my age, it depends on the way you lived for the last 10 years. Because if you lived minimally for the last 2 years, and there was a good Instagram post that I saw about rich people. Say you make $100,000. There are people who live on $100,000. And then there are people who make $100,000 but live on $50,000. And so my argument would be, if you're making $55,000 a year, you should be living on $30,000. And is it tough? Oh yeah. Oh hell yeah. I tell I know every kid in that I know of people. There are two types of kids. There are the kids where their parents can't afford a car for them. And then there are the kids where their parents can afford the car for them. The parents are hurting themselves by buying the kid the car. I would argue they're also hurting the kid. But the parents that can't buy a kid a car, the kids are just fine. Yeah, exactly. So Meek, I agree with you. It is tough for, I think, most people, because I think the average salary is like $70,000 in this country. So, but I will tell you, $70,000 in this country is a hell of a lot more comfortable than, $70,000. I mean, it's way more comfortable to live on $70,000 in this country than it is to live on $10,000 in any other country in the world. So we're human. We're not meant to be pampered, blah, blah, blah. And I think there's a lot of people who look at other people and say, God, I wish I had that. And I need that. And I think the FOMO stuff. But could I lived, and it was the early 2000s. So it wasn't that long ago. Gas was at $3 a gallon, close to $4. My insurance was about $1,000 a month. My rent was $1,200 a month. I lived on $29,000 a year in California. Don't tell me it can't be done. It can. I had a little dinky $2,000 car that I bought that I had to upkeep. So I think it can be done. It's just a matter of whether it's comfortable or not. And that's the problem. OUST, Ouster, looks weak, but that's a nice, 56% gain. Algorithm makes you 20%. Just trade down the 4-hour algorithm, Star. I mean, simple as that. I'd trade it on the 4-hour algorithm. That works. You're making a lot there. OUST future remains uncertain. Strong buy due to significant improvement in underlying profitability. Provides LiDAR sensors. They're not making money. They're not making money. This is do you want to throw money into it? No. 1 year, you're up 81%. Year to date, you're up 31%. It's great. It provides LiDAR. But they're not making money. I wouldn't own it. I would trade it. That's it, Star. Ulta's an interesting one. I still own Ulta. And don't ask me why I still own Ulta. But I do. I've ridden it through this downturn. So far it hasn't looked. I mean, just take a look at this. And Mark, before you look at Ulta, I will tell you I'm going to chart this against ELF. And it's going to look ugly. But it's I think this is the way retail is going. There are winners and there are losers. And I think ELF is, their growth has been fantastic. And it makes no sense. But I think you take a look at this one, even this. Look at ELF, 3 years, 5 years. Everything looks good on ELF. Everything. Even 1 month. I mean, it just looks so much better than Ulta. Now, if we look at peers of Ulta, Chewy, we're going to edit symbols. Because I just want to look at, we'll keep those in there. Bath and Body Works, no. Five Below, Tractor Supply, no. We're going to add in ELF. Okay, because it's another beauty company. Dick's and Chewy, they're just consumer discretionary, so that's all they're kind of putting in there. ELF is a consumer staples. You look at the market cap and $18 billion versus ELF at $11 billion. They're almost the same as freaking Ulta. You look at enterprise value, $11 billion versus $19 billion. You look at the employees. ELF has 38,000 employees. I'm sorry, Ulta has 38,000. ELF has 475. Now, you look at the price return, everything's good. Dix is a strong buy in the quant. That's the only one of the 4 that has a strong buy in the quant. If we go and look at the valuation of ELF is F, but its growth is unbelievable. If we go down here to, I don't care about dividends, valuation, and you look at the PE, ELF is 61, Ulta is 14. It looks cheap. But I would argue this PEG ratio going forward at Ulta, 1.21. ELF is 4.43. Chewy is 0.24. I'd probably go into Chewy if it were just based on the PEG. I mean, Chewy looks like a freaking value on this one. Revenue growth year over year, look at ELF, 76%. Revenue growth going forward, Ulta is 6%. ELF is 37%. Again, remember, their market caps are super similar. Profitability, gross profit margin, 42%. ELF is 70%. ELF could lose a profit margin of 10% and still be higher than Ulta. So you look at the number of shares outstanding, and ELF has a little bit more than Ulta. You look at Chewy at 435. They've just got, their value kind of 1 month performance. Look at Ulta. The momentum is not with Ulta, and that's hard to beat. So I like Ulta. I just would get crazy. I wouldn't get trapped into like a value trap kind of thing. But ELF is just so much better right now as far as the momentum, as far as the revisions, as far as the growth, as far as the valuation. Well, the valuation goes to Ulta. But I do own Ulta, and I don't know why I own it. It's a small position, but yeah. Not making money just like me. Yeah. Yeah, see, Sherry knows about this stuff. I mean, I don't know about beauty stuff. I bought Ulta thinking it was a good buy, and it was. I was up on it. What's your take on SOFI? I've been in and out a few times. Buy under 6, sell over, it's 7. Seems stuck SOFI is stuck for a long time, not just a few weeks. And you are right to trade it. It is super expensive, Eric. The only thing in SOFI is it will pop to 10. It will pop to 8, and then it will pop to 10. And that's been the thing. And what I want to show you is the weekly on this one. The weekly, we've pointed out before that this goes all the way back to January of 2023. And that's the range that you've been in. You've seen it go up, and then you've seen it come down. You've seen it go up, and you've seen it come down. We saw it start to go up, but it's coming down. And it's the valuation. And so while I say you could buy at 6 and go to 10, I think we're going to have to move this down as we go down. And I think your support level is probably, I think you're right. I mean, the next high on this candle is $5.55. It just doesn't look strong at all. And it's the valuation of it. I mean, let's go and look at SOFI over here on Seeking Alpha. It's a hold. But the valuation is where you want to look at. The valuation is crazy. They're not making money. That's the crazy part. They're not making money. When you look at the profitability, their gross profit, 82% year over year. But their net income margin, they're losing money. And that's not going to change. And that's the problem. They think they can expand their base, but they haven't been able to expand it to profitability. And that's the real issue. And so it's 19 out of 37 in consumer finance. MoneyLion, Opify, Synchrony is a good one. They've actually been doing well. Lending Tree Capital One is something that most people, I think, that's a $52 billion valuation. So SOFI's a little bit, it's a $6 billion valuation. It's not huge, but Capital One's probably better. And you look at Capital One and you look at the chart on Capital One, it's just been doing better. And it's a strong buy in the quants. Valuation is B. The revisions are what kills it. 10 down on earnings per share, 6 down on that one. When you look at the ratings and we look at Wall Street, it just got turned, by the way, to a strong buy here. You can see Wall Street analysts just hit a bit. 20 analysts, 157, you got 15% upside. So if you're looking to trade, I think SOFI will provide you the pumps. If you're looking for an investment, I think you're really looking at Capital One. So that would be my take on it. Okay. With that, I'm out of here because it's already 10:30. I'm supposed to be out of here at 10.